Friends, we will continue with what we were discussing in the last session, that is section 152, which has got connectivity to our reassessment proceedings under section 147. In the last session we were discussing on the point that in an assessment or reassessment made under section 147, tax shall be chargeable at the rates at which it would have been charged had the income not escaped the assessment. Yes, in case in the reassessment, if they found some escaped income, even that escaped income is also going to be taxed at the same rate as it would have been taxed in case if it is properly declared earlier. Now the most interesting part of section 152 we are into. The second part of section 152 says, let us suppose reassessment proceedings are opened. In that situation, in case if a new income is added, then assessee can always claim any expenditure related to that escaped income which they found. Nothing prohibits. But at the same time, try to understand, section 152 is very clear on what grounds you can challenge 147 and on what ground you can challenge the point that 147 be dropped in your case. In case if you can prove that their finding a new income in any way is not going to enhance whatever the income that is shown in the original assessment. What I mean is, let us suppose originally the assessee filed a return of income with the 2 lakhs and subsequently the case is taken up for assessment under 143.3 and the assessing officer disallowed some expenditure to the tune of 8 lakhs. Thereby he brought the taxable income to 10 lakhs. From 2 lakhs it is being brought to 10 lakhs. And assessee accepted it. Accepted it means what? He has not challenged the same before any appellate authority. Now the point of interest is, let us suppose your case is being taken up for a reassessment and they found an income to the tune of 7 lakhs. Then assessee can always say that originally I filed my return of income to the tune of 2 lakhs. Now you are adding it 7 more lakhs. Total is coming to what? 2 plus 7 is 9 lakhs. But already they have disallowed some expenditure and enhanced my assessment to the tune of 10 lakhs. So you are not in any way finding a new income. Kindly drop 147. He can do. But let us suppose it is not 7 lakhs. Let us suppose they have found 17 lakhs. Then what is happening? What they found is more than what they have added in the original assessment. They found 17 lakhs. In the original assessment, what is being added is only 8 lakhs. In that situation, he can't ask for dropping of the, what is it, reassessment proceeding. Of course, 152 should Now be very clear in your mind. The point here is, in case if the SSE can prove that what is being found out in the reassessment proceeding and what he filed in the return of income put together is going to be less than the amount of the completed assessment, then he can very well ask for the dropping. And in case if what they found in the reassessment is, if it is being added to the original income which we filed in the return of income, put together if it is going to enhance the assessment, then section 152 will not allow the SSE to claim for what is it, a dropping of the proceedings. Of course, many other interesting aspects like Supreme Court judgment in the Sun Engineering Private Limited, because there are certain standard principles which are established with this particular judgment. See, what you are not challenging against the original assessment, you can't challenge such concluded proceedings in the reassessment proceedings. What we mean is, let us suppose in the original assessment they disallowed a particular expenditure, or they have added some other income and completed the original assessment under section 143(3). Now they are taking up your case for reassessment under section 147. At this stage, can you fight against what is being disallowed or what is being added in the original assessment? You can't do, because it is already a concluded assessment. It's already a concluded assessment. So if you are not challenging that earlier, you can't challenge the same now, because the whole lot of objective of section 147 is what? Not to give some benefit to the SSE. In the reassessment proceeding, the objective is not to give the benefit to the SSE. Since he has not challenged that in the original assessment, let us give a benefit with respect to the concluded proceedings by taking up the case for reassessment. Is that the objective of 147? No. 147 objective is only to give the benefit to the revenue and not to the SSE. So through 147, what they can do is adding only. Either they should be able to add the income, or they can reduce the loss. What can't be done through 147 is, they can't reduce the income and they can't enhance the loss. So these principles are clearly laid down in the judgment given by the Supreme Court in Sun Engineering Private Limited. So these two principles kindly make note. That is next point. On reassessment under section 147, the original assessment is not wiped off, the original assessment is not wiped off. But it remains. Next point. Matters lost in original assessment proceedings, matters lost in original assessment proceedings which have since acquired the finality, which have since acquired the finality, which has since acquired the finality means what? Brackets. That is, against which no appeal oblique rectification oblique revision application filed. Brackets close. Cannot be claimed in the reassessment proceedings. Cannot be claimed in the reassessment proceedings. Therefore, expenses disallowed oblique incomes taxed in the original assessment against which no appeal oblique revision oblique rectification application was filed cannot be claimed as allowable oblique non-taxable in the reassessment proceedings under section 147. Of course, friends, this does not mean that, let us suppose in the reassessment proceedings they found a new income. Earlier we have not shown expenses relating to that particular new income. Can we claim such expenses? Yes. In respect to the incomes which they are adding through reassessment, against those incomes, to earn those incomes, what the expenses we have incurred, they can be well claimed is a point. What we have discussed is only like already a particular income is assessed in the original assessment proceedings. Certain expenses are disallowed. When your case is taken up for reassessment under section 147, what is being disallowed in the original assessment, you can't now again claim those things. But if a new income is being added, against those new income, whatever the expenses that are there, that you can very well claim. Write down. Expenses not claimed pertaining to the income which has escaped the assessment, which has escaped the assessment, can be claimed, can be claimed. Then already we discussed on one point, that is the very objective of reassessment is only to give the benefit to the revenue and not to the SSC. Got the point? Write down. Under section 147, the income cannot be reduced. The income cannot be reduced below the income originally assessed. Similarly, under section 147, losses cannot be assessed above the losses originally assessed. So, let us suppose you filed your return of income. They gave you an acknowledgement, and later on your case is not taken up for regular assessment under section 143.3. Subsequently, they issued a notice under section 148 to take up your case for, what is it, reassessment under section 147. In that situation, reassessment cannot happen with an income below what the income you filed through your return of income. Try to understand again and again. The point which we would like to drive into your mind is, in any case, reassessment proceeding should not give any benefit to the SSC. If SSC is having any problem with the assessment, original assessment, he has got many places where he can cry. He can ask for rectification of mistake under section 154. He can go for an appeal. He can go for making a request for revision under section 264 and all. On his own, if he is not doing any of those things, assessing officer मेहरबानी करके 147 खोल के उसको बेनिफिट देने का ऑब्जेक्टिव नहीं है 147 का. Got the point? Then friends, write down the point. Section 147 is for the benefit of revenue, is for the benefit of the revenue. And not for the benefit of the SSC. Then friends, look at a situation. There is a situation like this, that is, a particular SSC filed a return of income belatedly. In that return of income, there is a loss to the tune of 10 lakhs. Naturally, if it is a case of loss return under section 139.3 should have been filed before the due date. Since it is being filed after the due date, assessing officer in his original assessment order clearly written there that such losses were not to be set off or carried forward. This is not being challenged by the SSC. This is not being challenged by the SSC. Now his case is taken up for reassessment, and they found that there is an income escaping the assessment to the tune of 27 lakhs. Now the point of interest is, can the loss of 10 lakhs, can it be set off against this 27 lakhs of income escaping the assessment? Of course, if we ask a layman, he will always feel like saying that, अरे बिचारे को जाने दो, 20 lakhs, 27 lakhs of new income against that you can reduce the 10 lakhs. Because he can argue in a manner like 139(3) objective is what? Loss return should be filed in before due date. Section 80 says what? In case if the loss return is not filed within the due date and filed belatedly, such a loss will lose its right to be carried forward. But nothing prohibits a particular loss to be set off in the same year in which the loss is coming from one head. If there is a income from the other head, you can very well make set off. Yes. But that and all is acceptable in case had you properly shown this escaped income in that particular return of income and claimed that kind of inter-head set off or inter-source set off. Let you file your belated return, no problem. Under the head income from house property, you got a loss of 5 lakhs. You got a business income of 15 lakhs. Set off this 5 lakhs of the loss from the house property against business income of 15 lakhs and make the income as a taxable income as 10 lakhs and file the return belatedly. We don't deny your setting off, because the prohibition is with respect to what? Is with respect to the carry forward of the loss. The loss will lose its right to be carried forward the moment you are filing your loss return belatedly. Nothing prohibits you to make inter-source set off or inter-head set off. The year in which you are getting a loss from one source, you got income from another source. Or the year in which you got loss from one head, you got income from other head. You make a set off and file the return belatedly, still we will love to allow it. But the problem in which we are is what? He is not disclosing a particular income and there is a loss and he failed to file the return before the due date, and assessment got completed. Now when they are finding a new income through the reassessment proceeding, now if he says, sir, I filed my return belatedly, undoubtedly, but inter-head adjustment and inter-source adjustment करने के लिए, since there is no problem, kindly set off this particular loss of 10 lakhs against that escaped income which you found through the reassessment proceeding. Can such claim can be entertained? The answer is definitely not. Because the moment 143.3 assessment order is passed and it is not being challenged before any appellate authority or revisionary authority, or application is not made for rectification of a mistake, that means it is a final one. So what has attained the finality again cannot be reversed through the reassessment proceeding is a point. So this is the beautiest part of the law, learning of the law, right? It appears, yes, slightly paining, because poor fellow thought, let them cut me, then I will make use of these laws against that escaped income. Many of us has got this bad belief in us. क्या belief है? Return of income में हम क्या करते, कुछ losses को दिखा देते, on the pretext that even bad of the bad, if he makes some additions, this loss will help us to set off against those additions. Yes, that happens so when जब आप रिटर्न को within the due date में डाल के and the case is taken up for regular assessment under 143.3, probably they will allow that particular loss to be set off against that particular income. Let us suppose they are not invoking 143.3. Simply they started the proceedings under section 147. Then you are the big loser. Because what you thought, let me not disclose a particular income, since already I have got a loss in my return of income, this loss will help me, cushion me against that particular possible addition of income. But what you are wishing or dreaming to happen, that is all possible only with respect to the regular assessment, not with respect to the reassessment. In case if your case is taken up under section 147, what has achieved the finality in the regular assessment, and in case if the regular assessment is not made, that means ROI has achieved the finality, return of income has achieved the finality. So you have not filed any revised return, nor you have asked for any rectification for mistake in the deemed intimation, which is acknowledgement. So in that case the trouble comes. So I think the point is well gone into your mind, that is, in case if loss return is filed belatedly and original assessment order is made by saying that such a loss lost its eligibility to be carried forward, and in case if in the reassessment proceedings if a new income is being added, then against that new income this particular loss which has achieved its finality, which is not being challenged, cannot be allowed to be set off as a point. Write down, friends. Already you have written this point. Reassessment cannot result in reduction of income beyond the income originally assessed. That already you have made the note. Now, having understood that particular situation very clearly, take a small example through which we would like to explain clearly your 152, second portion of your 152. Write down. The SSE example, the SSE filed the return of income. The SSE filed the return of income for the assessment year, for the assessment year 2004 and 2005, 2004 and 2005, declaring an income of rupees 2 lakhs. Then the assessing officer made an order. The assessing officer made an order under section 143(3) on 31/12/2004. On 31/12/2004. Write down returned income. Returned income 2 lakhs. Add expense P. Disallowed. In spite of the fact that Supreme Court has held in some other case expense P to be allowed 8 lakhs. Now assessed income, what is it? 10 lakhs. In case if the SSE filed appeal / rectification application / revision application, then expense would have been allowed. Then expense would have been allowed. SSE did not file any appeal / rectification / revision application, and time for filing the same have all expired. On 1/1/2010, assessing officer finds escaped income for the assessment year 2004 and 5, 2004 and 5, amounting to case 1, rupees 17 lakhs, case 2, 7 lakhs. Can SSC make an application for dropping the proceedings under section 147? Of course, friends, this question is to be answered with the help of section 152. 152 says what? 152 says such an application requesting the assessing officer to drop 147 proceedings can happen only if he can prove that he had been assessed on an amount not lower than that would have rightly liable, even if the income alleged to have escaped the assessment had been taken into account or the assessment had been properly made. If this he can prove, yes, he can always make a request for a dropping the reassessment proceedings. All of you are clear with my point? My point, what section 152 says? Yes, original assessment got completed and the SSC has not filed any appeal against the original assessment, and to make application for appeal or revision or rectification all expired and reassessment proceedings are initiated against him, he can very well request for dropping of that reassessment proceedings in case if he can prove that by what they are going to add through reassessment proceedings, put together the income which he has shown and what is going to be added in this particular reassessment is either equal or less than what they have originally assessed, very well he can make a request for a dropping of 147 proceedings. Here in the given example what you are writing, 2 lakhs is the returned income, isn't it or not? What is the income? 2 lakhs. And they have made an addition of how much? 8 lakhs. Put together it became what? 10 lakhs. Actually this 8 lakh is an expenditure which is allowable, because Supreme Court in other case allowed this particular expenditure. But the assessing officer in 143(3) proceeding regular assessment, he has disallowed this. SSC is having a right to make an appeal, but he has not exercised that right to make an appeal. Now, in case if the assessing officer founds that there is some income which has escaped the assessment, and that is 7 lakhs means what? Put together 2 lakhs plus 7 lakhs is becoming what? 2 lakhs plus 7 lakhs is becoming 9 lakhs. Already you have assessed to 10 lakhs. And I am not challenging your assessment order, so kindly drop this 147 proceeding. I gave full respect to you. A thing which Supreme Court has allowed, I have not. You have disallowed and I have not gone for any appeal. Happily I paid the tax. So now through the reassessment, in case if you are going to add 8 lakhs, 7 lakhs, original 2 lakhs plus 7 lakhs is what? Below the 10 lakhs only, na? So in that situation, a considerate view can be taken is what your 152 objective. In case if through the 147, if they are going to find an escaped income to be 17 lakhs, then your original 2 lakhs plus 17 lakhs is much more than what is being originally assessed at 10 lakhs. If that is the case, the crime is non-excusable crime. No request for dropping the proceedings under section 147 can be requested through 152. Right? See, this is the beauty part of the income tax law. And at every time when you are agitating, you should be very clear with the provisions. In the income tax law, what I personally found is 2 extremes. There is no via media solutions. Because now Harita can raise a doubt. Sir, well, I understood what you said. But can the SSC make a request to the assessing officer, let you take up the case under 147 friend, but I am not challenging that 8 lakhs of disallowance which you made, which otherwise I am having a eligibility to appeal for. Now in this 17 lakhs, वो 8 lakhs को दूर करके बाकी जो 9 lakhs है वो एडिशन कर दो through reassessment. Can such a request be made? No. Your request for dropping 147 is permitted only when you are not challenging the original assessment, and your return of income and what they are going to add through this particular 147 put together is less than already which is being assessed. Original return of income is 2 lakhs, now they want to add 8 lakhs, put together is 10 lakhs, now they want to add 7 lakhs, put together is 9 lakhs, which is less than the 10 lakhs originally assessed. There you can request him to drop the proceedings. But your return of income is 2 lakhs, what they found through the reassessment, income escaping the assessment is 17 lakhs, 2 plus 17 is 19, which is more than your 10 lakhs of the assessed income. Now no request can be entertained under section 152 to drop that particular proceedings under section 147. So write down the answers. In case 1, since SSC has not filed an appeal against expense P, an appeal against expense P, comma, the order of the assessing officer, under section 143.3 has become final. Now, as per Supreme Court judgment, in Sun Engineering Private Limited, the SSC cannot raise issue of allowability of deduction, issue of allowability of deduction in 147 proceedings, in 147 proceedings. The assessing officer, next, the assessing officer shall reassess the income, shall reassess the income under section 147, under section 147 at rupees 10 lakhs plus 17 lakhs, 10 lakhs plus 17 lakhs, that is equal to 27 lakhs. And section 152(2), section 152(2) has no application here, has no application here. What is section 152(2)? Request for a dropping 147 proceedings, that he cannot do because income escaping the assessment plus original returned income is much more than the assessed income. So 152(2) through 152(2) you can't make any request for dropping the 147 proceedings. Case 2. Case 2. Case 2 में क्या हुआ दोस्तों? Income escaping the assessment, they found how much? 7 lakhs only. In the case 2 you write section 152(2), section 152(2) shall apply here, shall apply here. SSC proves that, SSC proves that even if income escaping the assessment been taken into account, been taken into account, his correct income is, his correct income is rupees 2 lakhs plus 7 lakhs, rupees 2 lakhs plus 7 lakhs. Originally in the returned income it is only 2 lakhs, na? 2 lakhs plus 7 lakhs is equal to 9 lakhs. And he has already been assessed, and he has already been assessed at rupees 10 lakhs, at rupees 10 lakhs. Under section 143(3), under section 143(3). And therefore proceeding under section 147 shall be dropped. Proceeding under section 147 shall be dropped. See, 152(2) says what? Small note you write. Section 152(2). What it says? Where an assessment is reopened, where an assessment is reopened under section 147, SSC can make a request for, SC can make a request for dropping proceedings under section 147 in case if the following two conditions are met. In case if the following two conditions are met. A, he has not challenged the original assessment before any income tax authority. Number 2, he had been assessed on an amount not lower than what he would be rightly liable for, even if income alleged to have escaped the assessment had been taken into account, or the assessment had been properly made, Friends, before I conclude section 147, let me tell you a good thing for the day. Some students will be approaching us. They are going to approach the teachers. Sir, this particular book is this voluminous. I am not feeling like reading it, sir. Can you make a synopsis of that particular notes and give it to us? Then somebody will come. Sir, you are saying that we should listen for 140 hours of your direct taxes, but I am left with only 30 days, sir. Is there any intensive crash course, not crash, crash course? Or is there any capsule by putting it in my mouth, automatically entire income tax will come to me? Or can you give your class notes to me? I will pay for it. मेरे पास पैसे हैं. Friends, only thing that I can tell you is, learning is one's own issue after they cross a particular age. It's all our liking for a particular subject which makes our marks to be improved in an examination. Yes, the last 152 what you have written can come to your refer before exam notes. Since you have listened this, since you have felt this, since you have read this, since you have written this, only this much of the part, in case if it is coming in your refer before exam notes, happily you will be able to reproduce the same when you are going for the exam. But some friend of you attended the classes, prepared notes like this, can you take that notes and can understand the whole law or the whole subject? Not possible. So my personal advice to any student is, there is no shortcut in learning process. Either you should have a patience to read this much of the voluminous book, or you should have a patience to listen a voluminous lectures like this. Other way around, without knowing the situation, you are simply by hearting 152 is acceptable till PU2. Because probably they may be asking you to write what is 152. But as you come to the final, unless you understand this 152 to a practical situation, it is difficult to score high marks in the direct access. So the last point in 147 is, if a deduction is retrospectively disallowed by a particular finance act, then assessing officer will disallow the deduction by issuing a notice under section 148 and making the assessment or reassessment under section 147. But in such cases, notice under section 148 can be issued within the time limit prescribed under section 149(1). Friends, earlier we discussed a point, that is, time limits which are being prescribed through 149, they are not applicable to give effect to the directions given by the appellate authorities. But this is not the case in case through a finance act a retrospective amendment is made, and through the retrospective amendment a particular expenditure is disallowed. Then the assessing officer want to reopen your case for reassessment, and in case if the time limit for issuing notice under section 148 is over, the assessing officer cannot take up the case for reassessment under 147. So what the principle we learned with respect to the reopening or taking up the case under section 147 to give the effect to the directions of the appellate authority is not applicable to give the effect to a retrospective amendment. For with respect to a retrospective amendment, in case if your assessing officer want to open the case, then unless the time limit is not expired, he can't reopen it. Write a small sentence.